I'll be switching my camera over to streaming in just a second. Let's get the room to fill up and so forth. All right, here we go. Let's move this here. Let's do that here. All right. And we should be live, just the way we like it. Good morning. Hey, Dave, infinitely. Brian, good morning, everybody. Good morning, good morning, good morning. Let me go ahead and share my screen before I forget to share my screen. All right, you guys should be looking at my screen. Timothy, how are you? Robert. So, again, a couple of things. We're going to have the VIP room today at 11 a.m. Here is the link, and also a link to uh, some extra cash flow that I'll be talking about today at noon, and I'll be giving you guys some more free trades. I hope you guys can make it. The link is up there, and we'll talk about that more in a minute. I'll be starting in just a minute. Just want to let the room fill up a little bit. My, oh my, we got a lot of stuff today. I want to show you guys something before we begin. Do you guys know what we're looking at right now? We're in the second half of February. This, according to Goldman Sachs, this is the weakest 2-week period that we're entering seasonally since 1928. All right. So just want you guys to know that right now we're entering the weakest 2-week period in 2 weeks. Jack, Arson, Jody, JB, Martin, Anastasia, good morning, everybody. Let me just type this in. Good morning here. Good morning, everyone. All right. So somebody here gets really upset when I say good morning every 5 seconds. So I'll just stop doing that because it's probably redundant. But so you guys can see right here, this is the weakest period from 1928. This is the weakest period in the S&P 500 that we're entering right now. So we've got to be extra cautious, okay? I'm going to go ahead and post this in the Telegram channel so you guys can see what I'm talking about here. I'll post it in the main Telegram channel. According to Goldman, one second, let me just type this in here. There we go. I just posted it in the Telegram channel so you guys could see it. They're not morning people. I agree with you. But we are morning people. All right. So I posted it in the Telegram channel so you guys can see it. If you're not in my Telegram channel, /Telegram. Here's instructions on how to get into the free Telegram channel. But that's where we're at right now. So I'm really careful of seasonality right now, especially over the next 2 weeks, and especially in light of what we've seen from the stock market. Let me just go ahead and close this. Yeah, and it's interesting, Adam. It's interesting that you mentioned the strength in cryptos. My theory is a lot of investors are now, and this is just a theory, that a lot of investors are starting to put their money into the gold into cryptos instead of gold when markets go belly, weaken. I think that's one of the biggest things. Scott, Thomas, hello there. Elizabeth, hello there. But I think that's very, very huge. But gold right now has been selling off, not going up. Typically, when stocks go down, folks put their money in gold. It's not happening right now. Part of the reason that's not happening is also, and I'll explain to you why, is because, and a lot of folks ask me about that, but I want to explain to you why it's happening. Here, let me just go to financials. Here, the US dollar. If you look at the US dollar, it's extremely pricey in comparison. Look at where the let me show you this. This is US dollar in 1986, in the 80s. This is in the 2000s. We reached all the way to 113. If you look at this chart, it looks like it's a declining level, but the US dollar is becoming more and more expensive. And it's a big flip in generational thinking. You're absolutely right. Huge flip in generational thinking. But I think the US dollar, the strength in the US dollar, and also the way folks are now viewing cryptos. Hey, cryptos are not correlated to stocks. Let's put our money in. So I think a lot of it has to do with that. Okay. Earnings today. Folks, we've got some big ones today. Keep your eye on semiconductors because Applied Materials is a huge stock within the sector. It's probably the fifth, fourth biggest one. And as far as construction of semiconductors, it's probably the second one behind LRCX and Taiwan Semiconductor. So we got Applied Material, we got Industrial, we got DK&G, we got Trade Desk, we got Coin today, we got Consumer Staples today, ADM, not AMD, ADM. I confuse them all the time. We got Roku today. We got DBX and Crocs. Crocs, I still favor Crocs quite a bit as a fundamental company. There are two companies that I like fundamentally. When I say fundamentally, as an investor, like Warren Buffett, Crocs and Lululemon. I think those companies are amazing companies. These are companies I would invest for many, many years to come, not for like a few days. Looking at today's calendar, we do have a busy calendar, although I think most investors are going to be prepping up for the PPI tomorrow, but jobless claims. Now, this report is going to be zero influence on the market. When I say zero, I mean zero. This report has been in the low 200s now for 2 years. A lot of people say the VIX is dead. No, the jobless claims report is dead. VIX is alive. So that's the first thing. The big one is going to be retail sales. All right, that's going to be the big report. But then you've got import and export. Industrial production is going to be a big report. So don't go gauging the market at least till 10:15. Don't go doing anything the first hour of trading. It's not that kind of market. We're in a very, very precarious position right now. But industrial production and retail sales are going to be the two reports. And one comes out in 34 minutes and the other one comes out in 48 minutes, okay? So we do have a couple of reports coming out and they're going to be very important and very influential. In terms of momentum levels, I showed this to you guys yesterday in the morning video. Now here's what you guys need to understand. All right. And this is really important. If people look at the S&P right now, this is confusing a lot of folks. And I want to make sure you guys are not confused. Right here. I'm not really concerned with pre-market, what happens pre-market. I don't trade the pre-market. So if you look at the S&P right now, okay, it looks amazing, right? I mean, look, all-time highs right here. We had a bear day. We're now pulling up. It looks like we're going higher. Well, technically, it looks fantastic. The problem is when you look at it internally, when you strip away all the market cap and everything, and you look at it, only half of the stocks are trading above the 50-day moving average in the broad market. And if you look at the S&P, 55%. So you're seeing a market that's being propped up, hugely propped up by a couple of stocks, a couple of large cap stocks, literally 5 large cap stocks, whereas the most of the market is not nearly as bullish. So if you're looking at a chart of the S&P 500 right now, and you're saying to yourself, wow, the market looks so amazing. Look at this chart. Look at this chart right here. I mean, look, how can you not buy this market? The reality is we're like right here. We're really right here right now. And I'm going to promise you guys, if the market was right here, you wouldn't be nearly as bullish as you are right now on the market, because you're seeing a couple of stocks making swing highs and you get really excited about it. But the truth of the matter is, if 55% of stocks are trading above the 50-day moving average, then the market's really right here, right? And the smaller stocks probably down here. Now, if you were to look at the NASDAQ, let's just take a quick look and see how the NASDAQ looks when we do this. Let's see here. And these are market performance and market momentum tabs on bar chart. So you could see here. Now, if you look at the NASDAQ, you could see the NASDAQ 63%. So it's not nearly as concentrated as you would think. Okay. And look at Russell 2000, guys, 46%. What stocks rallied the most? What stocks rallied the most in a real bull market? A real bull market. A real bull market. Small caps, 46%. So no, Dave, I don't think 50-day can be a support level. I think more like the 200-day, possibly after we have a big sell-off. I think we need to see some of these AI stocks cool off. But look at the Russell 2000, 46%. That's not a bull market. This is a market that's agreeing with what we're seeing in the broad market cap. And look right here. Look at all the sectors. Look at here. Utilities, 7% of stocks are trading above the 50-day moving average. Communication, 50%. Real estate, 19%, 46%. Here's where you see it. See, look. Industrial, which is number one stock, by the way, ETF on my list today of stocks, industrial, information technology. Even consumer discretionary is not that uppity. Ivano, Roddy, how are you guys? Good to see you. So again, please be very, very, very carefully. And if you look at Infotech above the 200-day, 84%, 81% industrial, 90% financials, too much. Look, 90% financials above 200, only 61 above the 50-day. So again, the markets are starting to get a little toppy. They need to see some corrective pressure. All right, I told you about earnings. I told you what we can expect today. We got a bunch of stocks. Let's talk a little bit about global economy, and then I'll talk about technicals, okay? And I'll talk about stocks. Michael says, what are the big 5 stocks that are making this market appear strong? That's a great question. Let me show you. Here. See, I got an answer for everything for you today, Michael. See, you ask a good question and you get a good answer. Microsoft, Apple, Alphabet, Amazon, NVIDIA. See, Michael, you weren't expecting me to pull a fast one like that out of my butt, right? I come prepared. Top 5 companies by market cap in the S&P 500 while the market is making a new high. Now look at what happens every time the market makes a new time high with the 5 most concentrated companies. Going back to 1966, Michael. Can't pull a fast one on me, Michael. I'm too prepared. I don't just say things like this. I do my research. So look at that. Pretty cool, huh? Here, let me post this for you. There you go. I just posted it in the Telegram channel so you guys can have it. You can't throw me off, Michael. It's impossible. Microsoft, Apple, Alphabet, Amazon, and NVIDIA. All right. You're welcome, Michael. Let's continue now. We got a lot of things to talk about. Can't throw Uncle Roger off. It's not that easy. But good question. Good question. I was hoping somebody was going to ask me that question. Okay, let's talk about global economy, and then I'll get into the bond market, S&P technicals, and give you my hot list. Can't pull a fast one over Uncle Roger. All right, retail sales figures are up next. They're going to be coming out. Goolsby said, that's right, Goolsby said yesterday that even if inflation data ticked slightly higher for a few months, it would still align with the trajectory towards the central bank's 2% target. Remember what I said yesterday? They're still looking at everything through a 2% through interest rate going lower this year. I gave you an example with the kid riding a bike. That's what he's saying. No matter what, even if hey, you're not going to get that bike in December, but you're going to get it in March. You're not going to get the bike in March, but you're going to get it in May. But you're getting that bike. The bike is coming. That's what he's doing right now. Even if we have to delay it, it's still coming. So the market is getting a little bit of a upside from that. Michael Barr stated U.S. policymakers need to see more data indicating inflation is returning to target levels before considering lowering rates. All right. We now have a 10% chance. That's kind of where I was thinking. Remember 3 months ago when I said markets are not efficient? A 10% chance of a 0.25 basis point rate cut at the conclusion of the March meeting and a 36.9% at the May meeting. Now, I'm going to tell you something that I haven't said in 3 months. Finally, for the first time today in 3 months, these numbers are meeting my expectations. This is what I was expecting to see. Okay. To me, this looks reasonable. 68%. Uh, there you go, Junior. I remember somebody stole my bike when I was a kid, and my parents didn't have enough money to buy me a new one. It was an expensive bike. It was a Diamondback Silver Streak, $265 back in 1981. Something, and they're like, "You're going to get a new one. It may not happen now, but you're." And I remember I was just like, "I'm going to get a new bike. I'm going to get a new bike," and I got one like 6 months later. But I got a new bike. But it's the same analogy. But finally, folks, I think that we are where we should be in terms of expectations. I think now the Fed, the market, and investors are all on the same page in terms of bond and what we should be expecting. And it took us a while to get here, right? So markets are not nearly as efficient as you may think they are. Think about it. We were talking about this months ago, and I was laughing at 68% in March. I thought that was crazy. Retail sales, core U.S. retail sales, going to be a very important report. Now, keep in mind, we're still coming off the holiday New Year's high. Markets are still near highs. So it takes a little time for retail sales to catch up. Okay. So if you see this report a little better than expected, remember that people enter the new year with a lot more positive sentiment than they end the year. So I think if you ask what retail sales data would be 2 months from now, I think the numbers would be much worse. But something you need to pay attention to, something you really need to pay attention to. Manufacturing activities coming out today. Manufacturing, industrial has been doing really well. You got industrial production data. Seth says, does anyone ever see price go back down after it goes up? The only thing that moves up, down is gas price, milk, nothing. It does, Seth. It does. Not as much as we'd like, but it does. It does. In the big scheme of things. The problem is, Seth, here's the problem, okay? I'm going to explain to you what the problem is. It's the companies, it's the middleman. Let me give you an example, okay? Do you guys remember a couple of years ago when we had a shortage of energies and all the energy companies started raising the price of gasoline? Well, the actual production companies did not see a higher gas price, but the middlemen, like the gas stations, they started raising prices in anticipation. So it's not always, Seth, it's not always the underlying price that does go up or down, but the middlemen have something to say about that. So it's regulated in the middle. So between commodities and the actual price we pay, there's a lot of hanky-panky that goes on, okay? A big example of that is what happened to California Lottery. When they voted the lottery in, they promised to give half of the money to public schools, and they did. But what they didn't say was they were going to take the existing aid out. So again, there's a lot of monkey business on the deeper middle cut level. Just so you understand, okay? So we got industrial. Good question though. Good comment too. We got industrial production. Hey, we just beat our top number. We got 203 people here. We just beat our 200 top. I love it. Love it. Love it. Love it. That makes me happy. I'm gonna take a picture of that. All right, good. Oh, even more. All right, so Europe, Christine Lagarde talked about stronger than expected corporate earnings. I would be careful because Europe follows U.S. quite a bit. Then Japan closed higher, hit a new 34-year high. Don't say I didn't warn you about this. I told you a year ago they were going to change their economy because they have a U.S. Educated senior guy running the show there who's an MIT grad, and he's not going to keep rates low. It's not going to happen that way. Keep an eye on network stocks today. Cisco is one of the biggest network software stocks. Software may see some downside. Another software stocks, two software stocks down. Paramount, I really like this company. I'm rooting for this company. This is another one of those companies that I like privately. Exactly, Junior. Listen to what Junior says. Paramount Global down. Warren Buffett disclosed that he sold $10 million worth of Apple yesterday, which isn't all that much. But sometimes when it happens one day, it'll happen over a period of time. So you guys have a good understanding of where retail sales are going to. We got retail sales. You guys understand that the S&P, even though it's up here, more so than not, it's right here. As far as, and I'm going to talk about some interesting things right now. Technically, let's talk technically. I really need an excellent trade to make. Well, Barley, in our trading pit, we've had a 95.5% win rate on over 114 trades, just FYI. All right, look at the bond market. The bond market gapped up right here, gapped up. And I think it's going to come down. I think the bond market's going to cool off, but this gap up is really good for stocks today. Let's see if bonds pick up on this gap and go above the 8-day EMA, or if we go down. Also, I wouldn't. Does the Pro Trader dashboard still have bearish market? Yeah, of course. We're in a pro. I got it. I'm in a short trade from yesterday from the Pro Trader dashboard. It works better. It actually, Jay, it actually works better in a bearish market, like twice better than a bearish market. That's why I love bearish markets, because the moves are better, and it's harder to get shaken out. Anyway, keep an eye on this. If you see after the report today, I don't mean to get interrupted, but this is important. If you see after the report today that this starts cooling off, it's going to get bearish for the stock market. If not, it's going to start coming up. Be careful. Please, please, please. Don't start thinking the market's going to be making all-time highs again and all that. The trajectory is grossly changing, and there's a lot less stocks participating in these shenanigans. Now, let's talk stocks here. SPY. Let me show you guys something. So here's what you need to look at. And I'm going to use the 5-day chart because it's easier to show you what happens overnight. So this is the all-time high right here. Remember what I said yesterday? There's a good chance we're going to come up right here to the breakdown level, test this level, shake, trigger some buy stops right here. All these guys that got shaken out, they're going to come right back in here and then come right back down. So be really careful, because look at where we're at. We're literally sitting right now at that level. We are in between that gap, the closing gap and the opening gap that we had the day the news came out right here 2 days ago. So the news comes out right here. We go down, 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 and we come right back up here. And the question now is going to be, are we going to go and make a new high, or are we going to start coming back down here? The key here is, if you come right back here, a lot of the people that got shaken out here are going to start coming back in and getting, oh, look, we're back above those levels. The market's going to go up. Let's buy, and buy. So I really, really want to see strength around the 500 to 503 level. I want to see commitment here. I want to see volume here. I want to see a day like this, but not to the downside, but to the upside. Because if we start seeing a little wimpy move right here, come right back down. And I think the reports at 9:15, at 8:30 will set the tone. But generally speaking, and remember, you have the PPI tomorrow. Even if we come up here, be careful. Honestly, between you and I would prefer we make a new high, pull back, and then I would start buying. I'm very, very nervous about being right here, because we're literally, do you see this? We're literally between the rock and a hard place here. So I was really looking forward to explaining this to you. If you're taking one thing from this video, please take what I'm showing you right now. Because look, market makes a swing high, sits right here, opens the next day. We have the nasty news. It comes down here, and then boom, 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 boom. We're all the way up here. But again, we're not up here. We're down here. We're down here. And you could see, let me just delete this line here. Kind of like an inverse head and shoulders. We gotta break above this level and really hold above this level. If we don't do that, it's going to be very, very bad. All right, now let me give you speculative is still leading, by the way. Semiconductor, retail, Russell, home builders. So speculative is leading. Let's see if it continues or not. Okay, very, 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 very important, and I mean very, very important. Here, let me just take this here. Here. All right. Good. Okay. let's go through some stocks that I'm looking at and I'm liking, okay? Thank you, Michael. I appreciate that. That's very nice of you to say. Very, very nice of you to say. Let me just repost that here. Very kind of you. Okay, let's continue. Let's look at some stocks. I'm going to go to the short side. Again, I'm going through the short side, then I'll go through the long side, okay? And by the way, the stock that we're short right now in the trading pit is a stock that I talked about here on this show yesterday morning, and it happened to be in the scanner. So FMC, here, this is better. This is where the stock is right now. Now, I'd like to see it break this level, but I want to give you the stocks on my list. We made good money yesterday. I gave you guys this as a bonus stock to the short side. I know a lot of you made some money on it. It's still in play. LMT. Actually, a lot of you made good money on it. Here's another one. I talked about it right here. And what did it do? It just kept going down and down, and I'm still bearish on it. Barley, I wish I got my product 20 years ago. I may not be doing this anymore. Here, let me repost this. It's very nice. Very nice of you. Okay, let's continue. And it's a good time. Nobody's in a hurry right now, so we can. It just depends on you, Jay. Depends on your risk level. LNG. Look at that baby. Ooh, this thing. This and look at volume. It's increasing. It was decreasing here on the SPY, but it's increasing here. Checks off a lot of marks. This stock right there. Another energy stock or utility stock, if you will. I gave you this as a bonus yesterday too, and guess what? Barley, I'll show you before you go, but you could totally replay this video. You can actually watch this video from the beginning in real time as you're watching it right now, just by rewinding the tape. And if you go to the live tab in the YouTube channel, you could find it there in real time. So you could literally be watching this video right now and going backwards and watching it again. And still in play, still in play. I would prefer to see this rally a little bit and then sell it, but still in play. So BIIB and CAR were two bonus stocks I gave yesterday, and they made money. HAE. It's ironic. The stock that I gave as my original stock is down like a quarter, 30 cents, but the ones I gave as a bonus made money. You just can't win. All right, look at that. HAE. Now we're going to go to the long side, okay? We're going to go to the long side. Just explaining it to you guys. Don't have any big surprises, all right? To the long side now. All right, let's start. WTW. Beautiful stock. RXST. Beautiful stock. Yeah, if you go to the live tab, you got to go to the live tab for all of this stuff. Next one, LUV. Look at that beauty. And if energy prices continue going down, airline stocks should continue moving higher. Because economy is getting better, folks. Talked about wrong stock, not KMX, not wrong stock, FMX. We've been talking about this stock all the way since it was right here. Not a new stock. MasterCard is looking really good right now. And if the economy is getting better longer term, then this is a great stock to have. DKS. Notice not a lot of tech stocks. That's right. What Brian said in the training videos. Live tab has everything. DKS. I talked about the stock right here, and I'm talking about it again. Personally, one of my favorite stores. I go there all the time with my wife because we're pretty active. We're pretty casual. Another one that's looking good. You may want to give this one a day or two to breathe. Veco. Never traded this stock in my life. That's right, Gary. 228 watching. We're breaking a record. Almost every other day, we're breaking a record. Veco. I told you my goal up to 2,000 by the end of the year. Veco, KMNT. A lot of boring stocks today, folks. A lot of boring stocks. Look at that. Now, look, you see this stock? If I can bottle a stock and put it into your head of what a good stock looks like, this is what a good stock looks like. This is what a really good stock looks like. Look at how the trend is just moving nice and easy and smooth. That's a beauty right there. Brian, these are the kind of stocks that you want to like put in your mind. Those are the kind of stocks. Those are good stocks. EEFT, last one. Now notice a lot of boring stocks. A lot of boring stocks, not a lot of the Amazons and the Netflix. I think those stocks are going to be like, let me show you AMD right now. We have a spread in AMD. The reason we have a spread is because I think AMD is going to go through a choppy period. So I have a spread right here and right here. But I think other stocks, industrial stocks, like this is my number one ETF right now. Okay. Very, very, very important. Not tech. I'm away from tech. Now, hey, Flying Rodent, how are you? Good to see you. All right. Now, folks, before I let you go, what a great session we've had. Before I let you go, something important, something that's very dear to me. Wall Street wants you to think investors has to be complex. It doesn't. Many traders believe they need to be math wizards and wait years to get decent returns. That's BS. I just got an alert indicating 3 stocks that are teeing up perfectly what could be for some extra cash. And I'm going to get very aggressive because I didn't realize how much people are enjoying that program. In fact, there's a lot of opportunities lately on 4 on NVIDIA alone that we just did. And I'm going to put some more on today, hopefully. The strategy I'm using is designed to make extra cash. We've had 18 winners in a row, and I can't promise future results, but they've been really good. NVIDIA earnings are around the corner, and I'm going to play NVIDIA. And I'm going to try to get another bite of the apple. That's not all, because there's 3 stocks now that I'm looking at in the next couple of weeks. It's happening at noon today. Please join me there, and I will see you guys later. Thank you for being here and joining me today. As always, if anybody has any questions, roger@rogerscott.com. Please feel free to email me anytime. I want to help you guys. I wish there was somebody like me helping me back in the 30 years ago. Have a great day, guys. I'll see you at 11 a.m. and we'll do part 2 of this. It'll be more interactive. See ya.